Hello everyone, welcome back. I got some really good ones for you today on this Saturday, April 19th, 2025. A lot's been going on with the markets. That's what we're going to be focusing on for today's video. So welcome back. Glad you made it. Glad we get to hang out together. I hope you had a wonderful Good Friday yesterday. I hope you're having an awesome holiday weekend. I hope you have a wonderful Easter tomorrow. You're spending time with friends and family. You're growing closer to the source, the man upstairs. All good things, right? But diving into these markets, we'll start with that 10-year yield in the bond market. We have the 10-year yield right now hanging out at 4.33%. We had a little bit of drama in the bond market last week. We had a situation where the bond bubble started to crack and shrink, and that sends yields higher. Always remember that bond prices and bond yields are inverse. So whenever bond yields are spiking, that's the bond prices coming down. And whenever the bond prices are moving up, that's the yields moving lower. So we had a spike in that 10-year yield last week to about 4.5%. Kind of freaked everybody out. Normally when that happens, the dollar gets stronger, but the opposite happens. So we had a situation where the debt market sold off, the stock market was selling off, the dollar was selling off, and this kind of alluded to evidence that perhaps there is this mass exodus internationally from U.S. assets. Put another way, everybody's selling USA, they're selling American, anything, any U.S. stock, real estate, bond, cash, just not the place to be for internationals.Her countries perhaps looking to dump their U.S. dollar denominated debt, dump their treasuries, dump their dollars. There's a lot of speculation around that last week. However, I don't think that that's what happened. I think what happened last week, the reason bond yields spiked, was because we had hedge funds that were making 50 to 100 to 1 leveraged bets in the treasury market. So they were doing arbitrage between treasury prices and treasury futures. They probably had a trade going where they were scalping like 0.1% of a risk-free trade, right? So, if I tell you I can guarantee you 0.1% gain for the day, well, what you do is say, give me a lever long enough and I'll lift the financial system. If I can just make 0.1% on $1 billion, that would be a lot of money. If I gave you 0.1% on $10, nothing, right? That's pretty much a penny. But if I offered you 0.1% on $1 billion, do the math on that. Right. So a lot of hedge funds were making very risky leveraged bets in the bond market, and it looks like some of those trades kind of blew up in their face. So we had a massive sell-off in bonds, big spike in bond yields. Again, it's called the basis trade. So that's what these traders were doing. It's called the basis trade, and they were just doing a little bit of arbitrage between U.S. Treasuries and U.S. Treasury futures, and the trade blew up. Kind of like the yen carry trade from a few months ago. That was a risk-free carry trade that blew up in everyone's face. With the yen carry trade, you could borrow in yen, Japanese yen, at very close to zero, turn around, buy U.S. Treasuries with it, collect like 4% yield. There was an arbitrage there. So that was called the risk-free yen carry trade, and that blew up in everybody's face. So similar situation for the bond market this week that caused bond yields to spike, but we have since seen bond yields back off down to 4.33%. I'd say if we get above 4.5% on that 10-year yield, look out below for risk assets all the way out to the end of the risk curve. So S&P 500, Bitcoin, gold, Pokemon cards, doesn't really matter. If that 10-year yield goes above 4.5%, look out below for a lot of those assets. On the flip side of that, if that 10-year yield remains stable or can move back to like 4% or even into the threes, I think that's the green light. Now that the bond bubble has been propped back up with those falling yields, that's the green light for all other risk assets to inflate. So we're looking for that 10-year yield this week to remain stable or come down like, 5 basis points a day kind of thing. That'd be good. 5 to 10 basis points a day. As soon as you start seeing like 15, 25 basis point moves in bond yields, put another way, like a 0.25% increase or decrease, that's instability in the bond market. If you saw that in one day, like 25 basis points or 0.25% move in the bond market in one day, that's a pretty volatile debt market. And when the debt market's volatile, it's like an earthquake. It just kind of sends those shock waves out to the end of the risk curve. So be keeping an eye on that bond market. Moving on to that VIX. The VIX measures fear in the markets, another thing that I track. We have the VIX at 29.65, still elevated, you guys. So, you know, these markets are volatile right now. That's what the VIX is telling you. We got the S&P 500 at 5,282, the NASDAQ at 16,286, and that Dow Jones at 39,142. We also have the Russell 2000 at 1880 right now. You know, that Russell 2000 got beat up real good with the tariff drama and, you know, rising yields and that real risk-off attitude we've seen in markets these last few weeks. That's really beaten up that Russell 2000, which are the small caps, and the NASDAQ too, that tech-heavy, growth-oriented NASDAQ. That being said, though, the S&P 500 and Dow Jones, they're holding up all right. We're close to a bear market in U.S. stocks, but we're not quite there yet. So once we're 20% off all-time recent highs, then you're at the line of a bear market. And we're not there yet, but we're flirting with it. The Russell 2000 fell into bear market territory. I think the NASDAQ did like intraday. So just bring up your charts of these 4 major U.S. stock indices and measure from the recent all-time high to the recent all-time lows. And once you're over 20% correction, now you've kind of entered into a bear market. So we're on the line of that. Now, if we're on the line of a bear market, that means maybe it's about to be a big bounce, right? So you're going to want to look to buy these markets. And if we're entering into a bear market, you're going to want to tranche out your buys. So don't buy all at once, but you're going to want to start buying these markets through the duration of the recession until we get out of it, or bear market until we get out of it. People use that word, bear market and recession, interchangeably. I got to be careful with that. A recession is 2 quarters of negative GDP growth, so it's a bit more of like an economic indicator, whereas a bear market's more of like a market indicator. So a recession is 2 quarters or more of declining negative GDP. So 2 quarters of negative GDP, recession. 20% or more correction in the 4 major U.S. stock indices, bear market. So, you know, they're generally quite similar though, right? Generally-ish, because if you have the markets in a bear market, you're probably also in a situation where GDP is negative, right? Or if you have 2 quarters of negative GDP growth, there's a high probability that those markets are in a bear market or close. You know, discounting the Fed opening up the floodgates and reinflating those things in a V-shaped recovery, but I digress. So I guess what I'm getting at, guys, though, is we're either on the line of a bear market and about to be in one, on the line of a recession and about to be in one, you know, and in all cases, buy. That the book says buy. I'm not telling you what to do. I don't do buy or sell recommendations. I'm not a licensed fiduciary. I'm not a financial advisor, but history tells you, the book says buy. So, you know, or don't, right? But I'm thinking it's a good time to get your feelers out, start buying up U.S. stocks, start looking at crypto, especially altcoins. So we'll get into all that. We got the dollar chart, the DXY, which is not measuring the dollar in absolute terms, guys. It just measures the dollar relative to other fiat currencies. I'll expound on more of that in a minute. But that DXY is down to 99. It's broken through that critical support around like 102, 104. And we come down below 100, you know, so freaky stuff for the dollar. We also have gold at 3,341 per ounce. So as that DXY moves lower, that dollar gets weaker, gold moves up, the glove fits. Now, if you want to know the dollar chart in real terms, we're going to take that 100-year gold chart and we're going to invert it. So as you see the gold price moving up and to the right, I want you to invert it, and now it's going down and to the right, and that's the US dollar in real terms, guys. I hate to say it. We're not on an official gold standard, but we're very much so on an unofficial gold standard. And what I mean by that is, yes, we decoupled from the dollar and gold in 1971, so we stopped backing the US dollar with gold in 1971 when gold was, you know, gold was 35 an ounce. So $35, 1 ounce of gold, same. As soon as we decoupled, though, we kind of stayed on an unofficial gold standard, because fast forward to today, and gold is now 3,341. It hasn't, guys, 1 ounce of gold has not changed in value. I know that sounds nutty, but just hear me out on this. the gold, 1 ounce of gold, that's the unit of account. That's the thing that doesn't change in value. So if you're a novice, you're looking at the gold chart right now and you're going, oh, gold's like appreciating in value. Gold's becoming like more valuable. But I want you to dig a little deeper and maybe ask yourself, or is 1 ounce of gold, which could buy me a nice suit today, could buy me a nice suit in 1971, could buy me a tunic, sandals, and belt in ancient Rome, like maybe the 1 ounce of gold has remained the same, and it's just the dollar's gotten exponentially weaker, maybe perhaps lost 99% of its purchasing power since we defaulted on the gold standard in 71. That's how I look at it, guys. 1 ounce of gold equals 1 ounce of gold. So if gold is the unchanging unit of account, because civilization grows in real terms at about 1% per year, and the gold supply inflates at about 1% per year, keeping it very stable. If gold is the stable unit of account, the most stable asset class on planet Earth, then really what the gold price is telling you is the dollar is very, very, very weak. So if you had 10 ounces of gold 20 years ago, and today you have 10 ounces of gold, your wealth has not changed. Now, nominally, you could go sell those gold coins today and get a lot more US dollars, but the reality is it requires a lot more US dollars to get anything, to fill up the gas tank, to buy a house, to buy a nice suit. You get the idea. So gold's going up a lot, and we've been fans of stacking precious metals on this channel for years and years and years. Go back years on this channel and you'll see I've been saying the same thing ad nauseum. We like to stack physical gold and silver for the long term. It's working really well. Gold is the money. Dollars are currency, gold is money, Bitcoin is money. It's sound money. Gold is fungible, portable, tangible, divisible, useful, scarce, indestructible. Like that's the gold standard for sound money. Gold standard, isn't that interesting? How gold's kind of woven itself into the lexicon, the vocabulary, the sayings we use over the years. Like gold passport member, golden rule, golden standard, gold standard, as good as gold, all these sayings that we've had for forever, because gold's the stable unit of account and everything else is pretty much credit, right? Got silver right now hanging out at 32. Back to gold. So what should we be doing right now? Well, if you've been stacking physical gold and silver for the long term, I'm done stacking. So chill. Or keep stacking for the long term and know that if the gold price were to begin to fall, you're not really losing money there. It's just the dollar is getting a little bit stronger, and perhaps it could be said that you should have just stayed in dollars if the gold price is moving down. But again, if you buy an ounce of gold and tomorrow you still have an ounce of gold, and a year from now you still have an ounce of gold, guess what? You haven't really lost anything. And that's really the train of thought I'd like to get you guys on. But again, do your thing. A lot of people don't like gold, right? As far as percentage of your portfolio, I would say like 5 to 10%. 10% is pretty aggressive, but I'm an advocate for 10% physical precious metals in your portfolio since the inception of this channel, because when I started the channel in 2022, I looked into my hazy crystal ball right after the CARES Act and said, inflation's going to be a problem this decade, and it has been, right? So gold's doing well. Stackers, keep doing your thing. Stackers never lose, or not. We have silver right now at $32.54 an ounce. Silver has been stuck in like the 28.32 range for the last few years, but I'm thinking if gold keeps moving up into the right, then silver's going to play catch up one of these days. Like silver's kind of a sleeper metal. It stays stable low for like maybe 9, 12, 15 years at a time sometimes, but then it goes into these pretty insane speculative bubbles. But again, I can't really say that the silver price changes too much either, because silver, 1 ounce of silver has been worth about a cooked steak for like thousands of years. So if the silver price, which is $32 right now, shoots up to 60, well, the price of a cooked steak, a prepared steak for you, has gone, from $32, $30 to 60. It's a mirror for dollar weakness, and not so much telling you that it's so valuable. But silver's a little bit more volatile than gold, about three times more volatile. So just kind of watch out for that. But maybe do a little bit of silver stacking because it is relatively cheap right now. That's maybe gold's a little bit too pricey right now, so you could do a little bit of stacking physical silver. I like 10 ounce generic bars. I like silver eagles. I like silver Canadian maples, you know, all things you could look at. Maybe get some like Australian roos, some little kangaroos, or some Chinese pandas. That could be cool. But yeah, so silver hanging out there at 32.54. You know, it's doing all right, but nothing crazy. We'll keep an eye on it. You know, I think silver could go to like 90 an ounce, and I wouldn't bat an eye if silver hit 90 or 100 per ounce in the coming years and decades. So I don't know. Silver's good, you guys. Platinum hanging out at 976. You know, that's pretty crazy that gold's 3,341 and platinum's only 976. Because guess which one is more rare, you guys? Platinum is way more scarce than gold. We have seen a falling demand for industrial platinum, given that a lot of cars use catalytic converters, but we're moving to EVs. Like, I guess there's just not as much demand for industrial application for platinum lately, but I still like it for investment demand. I still think it would be great just to sit on as an inflation hedge, especially because all the gold ever mined on planet Earth would fill around 3 Olympic-sized swimming pools, and all the platinum ever mined on Earth would fill to your ankles on 1 Olympic-sized swimming pool. So much, much more scarce than gold, and 1/3 the price right now. So that's platinum for you. So maybe do a little bit of stacking with some platinum or palladium. It also helps to diversify your physical precious metals portfolio. I kind of floated the idea in one of the more recent videos I did, perhaps it was the last one, about gold mining stocks, and that's maybe because gold that's in the ground right now, yet to be mined, as far as these valuations on mining stocks, is a lot cheaper than the physical gold that's already out of the ground. But just be very, 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 very exceedingly careful with mining stocks, guys. You can totally do without mining companies. The reason for that, oh man, that's a separate video, but there is a lot of, I'll do a video for you guys on why you should trust gold that's already been dug up and you buy it and now it's in your hand versus promises to go dig holes and get you more gold through owning gold mining shares. I'm much more of a fan of owning precious metals, the physical kind, as opposed to the mining stocks. But maybe valuation wise, there could be some opportunity in those gold and silver mining companies. But oh man, I mean, guys, everything from like geopolitical risk, like what country the mine's in, banks not really liking metals for a whole host of reasons. Maybe the mine, it's literally a gold mine, but they can't get water there. There's no infrastructure. There's no roads. There's like a whole bunch of reasons why it doesn't get easier to find and mine. So like that's a pretty terrible business, Productivity increases for a lot of industries and businesses, automation, AI, all those things are a real tailwind for a lot of businesses out there. But mining, guys, is still very difficult to do. If I hand you a shovel and I say, go find me an ounce of gold, like that's really hard to do today, and it's going to be really hard to do tomorrow, and it's going to be really hard to do in a month from now. It doesn't get a lot easier to mine. I mean, they do have those big trucks that have like wheels twice my height, let alone the actual dump truck on it, which can carry like tons and tons of ore for processing. But even with those, with that aid of technology for mining, gold's where you find it, and mining is very difficult. So when you become a mining investor, it's a hard life, okay? Even for the best of them. All right. And 99% of those mining companies, they're not worth anything. They're going to zero, right? Just like an altcoin or something. So anyway, that's your precious metals space. We got Bitcoin right now hanging out at 85,282. So Bitcoin's doing quite well, gold doing quite well. Both sound money that don't carry any counterparty risk, and that's why they're doing well with this tariff drama, all this market uncertainty, so speculative tokens, but also sound money. Speculative token is like kind of a negative connotation, even though it is, but sound money like gold and Bitcoin are doing really well. Don't carry any counterparty risk. Stored energy, market really likes that right now. Market doesn't like stocks because that's promises for work to be done later, and everyone's like having trust issues right now and a lot of uncertainty. So yeah, sound money, speculative tokens performing better, both kind of seen as safe havens during times of market uncertainty and turmoil. There you go. Here's a few stocks for you guys just to take a look at. Again, this is not buy or sell recommendations, but I'm just kind of sharing with you my watch list. Got some energy stocks you could look at. Could be CVX, that's Chevron; XOM, that's ExxonMobil; COP, that's ConocoPhillips; OXY, that's Occidental Petroleum; HAL, that's Halliburton. So there you go. I just gave you 5 oil energy stocks: mega cap, large cap, big companies you could take a look at. Good for the dividend, good for rising energy prices, which I think, looking into my hazy crystal ball, guys, I see WTI crude moving up like, 90, 100, 110, 120 a barrel kind of thing in the coming years. I could totally be wrong on that. And even if I am, a lot of these mega cap, large cap energy stocks, they're good to hold for like decades, you guys. So like multiple cycles, right? So you could take a look at it or not. For uranium, you could look at CCJ, this Cameco. They're a uranium company for this nuclear renaissance we appear to be entering into. So if you're interested in nuclear, you could take a look at stock ticker CCJ, Cameco. I've seen it pronounced both ways, still not sure how to pronounce it, but take a look at it. Some financials would be Goldman Sachs, JP Morgan, and BlackRock. So GS for Goldman Sachs, JPM for JP Morgan, and BLK for BlackRock. BlackRock, I saw an article recently, they're up to 11.7 or 11.6 trillion in assets under management. Like, guys, if you want to know what's going on, like underneath the hood or behind the curtain, don't look to politicians, okay? Look at Larry Fink, the CEO of BlackRock, with his $11.6 trillion in assets under management. How much is a trillion? A million millions. So to visualize it, put $1 million in a briefcase. You got $1 million in a briefcase. Now line up 1 million of those briefcases. That's a trillion. BlackRock has 11.6 of them. So they are the beast system in many ways, right? Goldman Sachs are the Navy SEALs of investment banking. Employees of Goldman Sachs are stratified into 2 categories: the haves and the have-yachts. So you're either a have and you're making $450,000 a year at Goldman Sachs, or a have-yacht, and who knows, you could be making, millions and millions of dollars a year working for Goldman Sachs. So you're either a have, you have, or you're a have-yacht, you have a yacht, right? But who wants to work 50, 60 hours a week, right? And that's so ride the wave, buy GS stock and sleep until 11, right? That's what we're into. And then JP Morgan would be your largest commercial bank in the United States by assets. I'm pretty sure they're like a $2 trillion company. The largest commercial bank, JP Morgan. Take a look at them, or don't. All these stocks, guys, are like large cap and mega cap, so you can hold them for decades and decades, or not. Some tech stocks you could look at would be Amazon, Google, Apple, Meta, Nvidia, Honeywell, Tesla. Some other stocks you could look at, perhaps Caterpillar, Home Depot, Steel Dynamics, stock tickers STLD for Steel Dynamics, PG, Procter & Gamble, Costco, VWO, Emerging Market ETF with Vanguard, EPI, Wisdom Tree, India. So VWO and EPI would be a little bit like emerging market, Southeast Asia, India. These are all good places to look outside of U.S. equities to invest, but I wouldn't go, don't go overboard with it, guys. Maybe make it like 5 to 10% of your portfolio allocation is outside of the U.S. So, but add a little bit in there, might not be a bad idea. Some other just random companies that are on my watch list you could look at would be Monster Beverage Co. Take a look. Rivian, Alibaba, Boeing. There you go, guys. So just gave you a little bit of stocks you could look at, precious metals. Cool. Gave you kind of a summary on markets in general. Now let's get into some of these meme coin picks, you guys, because I think meme coins are about to come back from the dead, but I could totally be wrong. I do think, though, the lows for altcoins and meme coins are in. So I think we're gearing up for an alt season. It starts at a horrible level in sentiment, which is where we're at right now. And then next thing you know, we're at extreme greed and everyone's YOLOing in. And that's when you dump half or dump all your positions and wait for the next cycle. So I think now is a good time to discuss altcoins and meme coins, because I think that these things, it's not a if they'll come back, but a when. And I'm thinking we're probably closer to the bottom here. We're certainly not at the top. I think we're close to the bottom. And I think the absolute lows for altcoins and meme coins could have been in the first week of April. So we've already kind of discussed Bitcoin. I think Bitcoin's mother, the daddy, however you want to look at it, it's the number one cryptocurrency. It's arguably the only cryptocurrency that works. The rest are kind of decentralized in name only. But I'm gonna share with you guys my top meme coin picks. So, you know, we got Bitcoin. I hope you have a little bit of that. If not, whatever. Hope you got a little bit of Solana, maybe a little bit of Avalanche or XRP or Cardano. But I'm here to talk about memes. You know, I want to talk about these meme coins. So that's what we're gonna finish the video talking about. So Doge is the largest meme coin by market cap. I don't own any, but you gotta bring it up because it's the number one. It's like the daddy. Then you got Pepe. Pepe is my favorite meme coin. It's on the Ethereum blockchain. I love Pepe. I love SPX 6900. That's also on the Ethereum blockchain. So another one you can look at. That's the ticker for that is SPX. Again, it's SPX 6900. I've got about 1,000 of those. Got about 777,777,777 Pepe. So 77777. A lot of sevens for the Pepe, and then about 1,000 SPX 6900. I like Harry Potter Obama Sonic Teninu. The ticker for that is Bitcoin. That's the people's Bitcoin, the thicker ticker, the coin who lived, the end game. Okay, so that's Harry Potter Obama Sonic Teninu. It's on the Ethereum blockchain. I have 7,500 of them right now, but I'm looking to bump in the coming days to 10,000. Take a look at MOG, M-O-G. That's also on the Ethereum blockchain. And APU, APU. That's also on the Ethereum blockchain. For the Solana blockchain, you can take a look at Fartcoin. Fartcoin looks like to be the flagship Solana meme, just going off market cap and interest and sentiment in it here. You know, the really sad story is last year in October, I bought 8,550 Fartcoin for $115. I sold half of them, 4,500 at a double, and I had 4,000 left worth like $100. And then it popped a little bit more, and then I sold the last 4,000. And right now that would be worth around $4,000, but I fumbled the bag, guys. I fumbled the Fartcoin bag. I don't own any Fartcoin right now, but a lot of my buddies do, so we're just gonna have to see where that goes. Yeah, there's a there with Fartcoin, you know, so shout out to the homies, you know who you are. Good luck. And I'm with you, though, if not in spirit, right? But I do own Pepe, I do own SPX 6900, Harry Potter Obama Sonic Teninu, I own MOG, I own APU. I don't own any Fartcoin. Now we're into Solana. Another coin on Solana I do own, Retardio. Another would be Harambe. Another Autism. Another Retard Cat. And then I don't own these, but I'm looking to pick them up in the next couple days or so. A little bit of Crash Out, a little bit of Feet Coin. So there you go. We're having fun with it, you guys. I also own some Sui memes. So I have a Sui wallet. I own a little bit of FUD, a little bit of Pug with Hat, a little bit of Bluefin, but that's not really a meme coin. So I own a little bit in my Sui wallet, but my focus, especially for memes, is the Ethereum blockchain, and I have a MetaMask wallet for that I use that I really like, and then the Solana blockchain, and I got a Phantom wallet. So MetaMask wallet, Phantom wallet, be great wallets to start adding some of these memes, or not, right? I like them, but you don't have to. I think crypto, though, is unstoppable and the future, guys. So, and really, you know, people don't like meme coins because they say there's no there, but I'll leave you off on this. Everything is a meme. It's all a meme. Everything is a meme. I would say you arrive at price for any asset when you combine like its meme energy, like how much interest is it drawing, how much hype is there, and then you kind of, your currency pair for that is the bond market. So if you can just mix the level of meme energy with what's going on with the bond market, you can arrive at a price for any asset. But the bond market is also a construct that exists in the minds of men, you guys. The bond market is a meme. The dollar is a meme. Your retirement is a meme. Your 401k is a meme. Your mortgage, it's a meme. It's all a meme, right? So if everything's a meme, then pick the best memes, guys. So That's really all I got for you guys today. I hope this video finds you doing well. Like, subscribe, comment, share, whatever. You guys are awesome. Let me know what you guys think of this video. What are your favorite meme coins? What are some of the companies you're looking at? Like, it's really time to get out there, guys, because you know, we got to buy when blood's in the streets, right? Or not. So like, subscribe, comment, share, whatever. We're just going to reconvene as things progress, and we're just going to keep going, all right? Till next time.